Hi, my name is Alex Carlucci with GustanShow.com at Loan Cabin. Here to talk to you about VA loans and exemptions and tax exempt and all that kind of stuff. So, if you're a veteran and you're applying for a mortgage and you're a first-time user of the veteran mortgage VA Certificate of Eligibility, there is an exemption status on there that exempts you from what's called a funding fee. It's like an upfront charge that you borrow, and there's different types of percentages for first-time users, cash out, second-time users. There's a chart. So if you're 10% disabled or 20% disabled, you'll be exempt from these funding fees. So that's the good things about being disabled. The bad thing is that you're disabled, so it's not a good thing that you're disabled. But when buying a house, it's good that you have this exemption. Now, what that means is when you buy a house and you don't have this exemption, you're going to get hit with these large charges and you have to borrow it. So if you got the exemption, it's going to save you a lot of money in terms of borrowing. So on a $300,000 loan, 2.15% is a typical funding fee. It's an extra $4,200 that you have to borrow. So that's going to drive your payment up $25, $30 a month. And plus, when you go to sell it, you've lost that $4,000. So you lost that equity. So it's a double whammy in a sense. Now, if you're exempt, you don't have that charge, one. Number two, if you're 70% disabled or more, most states in the country will exempt you from paying property taxes. And how that works is that once you close on the loan, you have to go apply for your exemption. So when we close your loan, we're going to hold an escrow account, meaning that we're going to have a little savings account for your taxes put away for the next tax due date, and then every month we're going to be collecting that monthly amount for taxes based over the yearly tax rate. And if you're 70% disabled, you have to go now after you close to the county and apply for a complete exemption from paying those property taxes before they give it to you. So what you're going to do is you're going to go to the county and say, look, I bought a house, look, I'm 70% disabled, please make me exempt from my tax bill. They're going to hand you an exemption letter. You're going to, sometimes it's going to be a couple $100 a year, sometimes it's going to be zero. Sometimes it varies from county to county and state to state. But you're going to take whatever that is and you're going to send this to your new lender and say I'm exempt, and then they're going to process that in their system, and either, they usually do an escrow update once a year, twice a year. You may have to wait for that, and then you get a refund. So once you get that refund, then your payment will go down and it'll be adjusted by your tax bill much lower. So if your taxes are $200 a month, your payment's going to be $200 higher for the first 2 or 3 months until you get the exemption filled out. You take the paperwork, send it to your lender. It takes them another 2 or 3 months to update your mortgage payment, and then it drops and you get the new lower payment and you get a small refund from the escrow account. So that's kind of how it works if you're a disabled veteran and you're exempt from paying property taxes. And if you're 10% exempt or 20 or 30%, you avoid the funding fee. So any type of disabled, you're exempt from the funding fee. 70% disabled or more, you're exempt from paying property taxes too. So that's the good thing about being a disabled vet. There's some bonuses to it, and if you got any questions, go to GustanShow.com and give me a call anytime. My name is Alex Carlucci at 630-915-7550. Thank you.